This time, I asked Grok AI to come up with a strategy that can replace anyone's 9-to-5 job in just 3 months. Of course, I had to refine it, tweak it, and put my own spin on it, just like I do with any AI-suggested strategy. But here we are. So make sure to watch the whole tutorial because it's absolutely worth it. I'll walk you through which indicators to use, the entry and exit conditions, and some trade examples to help you fully understand how it works. If you find this helpful, don't forget to hit that like button. Now let's get started. In the indicator search tab, type in sessions and select the one by LuxAlgo. This indicator helps identify trading sessions. Then search for fair value gaps. And again, select the one by beloved LuxAlgo. A big shout out to them. This will help us spot fair value gaps in the market. Finally, type in zigzag and pick this one right here. This particular one helps identify zigzag patterns, which mark pivot points or swing highs and lows in the price action. One key thing to note is that this strategy works best with the US dollar-based assets or securities that include, of course, US dollar on one side, such as Euro USD, GBP USD, or indices like NASDAQ and the US 30. For this video, we'll go with the US dollar against the Canadian dollar. This strategy was originally developed by Michael, the guy behind ICT or Inner Circle Trading. According to him, trading this strategy could make you so much money that you'd be able to quit your 9-to-5 job in just 90 days. So what are the conditions for entering trades? Let's break them down. First, set your chart to the correct time frame, the 5-minute time frame in this case here. Be sure to switch to this before proceeding. The second condition is trading sessions. Only take trades within the first 1.5 hours of the New York session. To identify this, we'll use the LuxAlgo session indicator. Open the indicator settings, change the time frame to New York's, which is UTC-4, and input 9:30 a.m. as the New York open time. Then add 1.5 hours, taking us to 11 a.m. This will be our trading window. Uncheck all unnecessary options. Change the color to something more visible like yellow or any other color to your preference and hit OK. Now our session window is set. Before moving further, let's adjust our indicator settings. For the fair value gap indicator, change the threshold to 0.004 and click OK. Next, for the zigzag indicator, set the depth to 5. Then in the Style tab, disable the first two options and finally click OK. The third condition is identifying the pre-market buy-side and sell-side liquidity levels. The buy-side liquidity level is a swing high, but not just any recent one that's been around long enough to be significant. The sell-side liquidity level is a similar concept but for a swing low. Once these levels are marked, we move on to the next step. Now we wait for the market to open and see whether it breaks the buy side or sell side liquidity. If sell side liquidity is taken out, we look for a long position. If buy side liquidity is taken out, we look for a short position. So we sit tight and wait. The market has opened and as you can see, price surged ahead, taking out sell-side liquidity with a strong wick. That means we're looking for a long position. Now we switch to a 1-minute time frame and wait for a market structure shift. This happens when price breaks a key market structure level, like a major resistance level or a significant swing high. To identify that, we use zigzag indicator. Clicking on it reveals the key swing high and lows. The most recent swing high is our key level. We now wait for the price to break and close above it before confirmation. As soon as it happens, we move to the next step. Next, we identify the most recent fair value gap and set a buy limit order just above it. This is where our fair value gap indicator comes into play. By clicking the eye icon, we activate it, and as you can see, it has identified a fair value gap right here. We set our buy limit just above it. The stop loss goes below the gap or below the candle forming it. Take profit is set just below the buy side liquidity. If price revisits the fair value gap, it should activate our buy order, ideally head toward take profit. Let's see what happens. And just like that, price comes back, fills the fair value gap, activates our long position, and eventually hits take profit. That's a solid trade with a risk-to-reward ratio of over 1 to 4. Of course, for a short position, we do the opposite. That's it, a highly effective and seemingly profitable trading strategy based on ICT concepts. If you found value in this video, be sure to like it, subscribe to the channel if you haven't done it yet, and turn the bell on to stay updated. Thanks for watching, and I'll see you next time.